Good morning, traders. I trust you're all well. 11:20 here in London on Tuesday, the 19th of May. And a quick market recap as requested from many of you. We've seen that the last couple of weeks have been very range-based. Dollar in particular has been very indecisive. We've been stuck in sort of sideways consolidation. Price failing to perform seasonally. Now, typically in May, it is usually one of the stronger months for the dollar, and it's heavily underperforming during this seasonal period. It's not invalidated. We could still see a peak edging onto the back end of May, but typically it does turn bearish in and around May the 25th. So we've obviously got that in mind, and with equities performing well, it does mean we might start to see the dollar come under pressure again as it does kick in the seasonal period back in back to the back end of the 25th of May. We have to take that into consideration. Now, if we take a little look deeper, you can see sort of 99 and 101 as sort of clean levels of our range based, as we're saying here. And obviously you've got minor supports in 101, 140, 99.62, which actually price broke heavily yesterday. 99.62 is the monthly support level. Now this kind of does give me the indication we may see a continuation of the bearish move. I wasn't expecting to see price break 99.62, as you can see in here. So again, another sort of 40 pips lower to 99. If we see a clean break of 99 as we do approach the the start of June, should we say, I would expect to see the dollar move a lot lower. We have to take into consideration the financial markets and every other market that can be correlated with the dollar's performance. But as it stands, I mean, technically it's not looking great, but sentiment-wise and momentum-based, we have seen a bearish couple of days. So we have to take that into consideration. We're now trading below the monthly pivot. Is a strong indication price will continue to the downside. 99 being the next level in place. And again, if we break that, there is a lot of room for downside opportunity. In terms of trading it, what I expect to do with the dollar, it will have to be short-term momentum-based positions. Very, very intraday bias currently, considering we haven't had much direction across April and May. As I said, May is usually one of the stronger months for the dollar, and we haven't seen dollar strength kicking at all. Lack of buying in here, lack of selling in here. It has kind of stuck in this range-based performance. So again, bear in mind 200 moving averages low. I like to see price break 99, break the low. That may confirm an opportunity to continue selling. So just bear that in mind, guys. Obviously, euro dollar is technically a mirror image, and what this 108.80, even lows of sort of 107.70. Price very, very clearly failed to break multiple times. And we've seen a real push higher from that level yesterday. Again, looks to be trading in this range. 110, which we know is a significant level of support at the back end of last year, start of this year as well. It does look like price is going to come up and test the highs of this range. Personally, for me, yes, there may be room for short-term intraday buying. You're only looking at 40, 50 pips. So is it really worth risking your capital for a little move in here? Personally, for me, I'd like to either see a break above or potentially a move back down to 107.70, where I may look to intraday sell against whatever currency pairs the stronger performance at the minute. Nothing exciting just yet for me on euro dollar. Now, as you can see on the smaller time frames, price is starting to show cyclicity. We did have a pullback, failed to reach the 20 moving average early hours this morning. But if you look down to a 15-minute chart, we did see multiple bounces from the 20 moving averages, allowing us multiple opportunities to enter. For me personally, again, I'm not looking to do too much with euro as of yet. There are better performing currencies and better looking charts out there, but just bear that in mind that unless we see a clear break, I wouldn't bother buying into 110 being major support. Cable is something I am looking to trade. Weakest performer so far this month. We have seen multiple opportunities across the smaller time frames. Initially, as we thought and as we've discussed, guys, we did see a head and shoulders potential in there. Price broke that, failed to actually move any lower. Double top formation, just shy of the 200 moving average, which again, we've seen used a strong level of support resistance. Price did come lower to the back end of last week, took out the previous low of 1.2245, and we're now seeing price in a daily phase 2. 1.2245 has seen minor support previously, and if you do go back to sort of end of 2019, and if you do go back further as well, back into 2016-17, you can see that price has acted as support. So we are sitting in, I would say, a major level. which is interesting because if we see price consolidate and range in and around 22.40, I'll then be interested to start thinking about selling. Failure of that, if we do see a daily close higher than this point, I'd expect price to come up to 124, form a lower high formation, and that would be my daily entry short, meeting core rules. Once that daily move does kick in, allow price to break back below 22.40 and then start to look for your intraday cycles, as we do have a lot of downside potential here. So a couple of key levels in place there, guys, but I am interested to see pretty much today if the daily closes below 122.45, it may allow us to get in a more aggressive entry using the smaller time frames, even down to the 1 hour, perhaps wait for another lower high formation and back lower. Again, you've got a nice area to target and then an initial further drop too. So just bear that in mind, guys. I am looking to sell pound across the board, not just pound dollar. If yen perks up, pound yen short, pound Swissy short, potentially pound CAD short. So there are a couple of opportunities out there. Aussie, a lot of you have been asking about Aussie. Aussie is heavily correlated with the equity market currently. So all the time that you're seeing the S&P 500 drive higher, it's driving the ASEAN, the Kiwi chart, essentially a lot higher. This technically did look like fantastic shorts back in the last week as well, and even the week before that, as this move here did start to slow down. And when we see, just draw it roughly for yourself, when we start to see this range start to narrow out, price foul to continue making higher highs, higher lows, which is the technical pattern we identify in an uptrend, it does start to indicate price to start, as you can see, I mean, lack of buying in here for sure. In comparison to the moves we saw earlier on in the cycles, it does technically start to show a bearish move, but sentiment driven, I would be interested to see if price does come up to meet 67. As you can see, 67 previous weekly support, and price did break that at the start of February, so we're now recovering back to 0.67, psychological point for the Aussie dollar as well. So something to bear in mind. I mean, if it does move to 67, you've got over 150 pips in play there. So we definitely have to start to think about adapting outside of analyzing technically and starting to think about, right, if the momentum is driving or the overall sentiment is driving price in a certain direction, I now have to actually start to look at smaller time frames, look for cyclicity, find opportunities to get in, to get out, make my money up elsewhere essentially. So look, there is a potential from price to meet 67. I wouldn't like to be a buyer above that. Seasonally, Kiwi is quite bullish at the minute, which is interesting. But as I said, I would be interested to see if we can see a break to 67 and above. All the time we're in here, I may not look to do anything more than short-term intraday buys. I would love to be a seller if we can see a lower high formation below 64.70. That would be my ideal entry short, back down to 60. Let's see what price can do. It is very, very weak in comparison to what price has been. Kiwi, again, Kiwi technically doesn't look as nice as Aussie, and we have been kind of range-based for a longer period of time. Yesterday, we saw a very clean break of 0.60, which for me did indicate potential buying now. Price isn't weak. It isn't as weak as it has been, as we can see when we're trending back at sort of the other lot or the previous week in terms of Kiwi shorts. We're now seeing a real change in sentiment. So again, we have to adapt to that, guys. Short-term buying is an opportunity. But again, technically from a daily chart, it's not looking pretty. So we may start to see price slowly progress. Again, if the S&P 500, the equity market does increase, then we may start to see a move slightly higher. It has to be short-term buying. I know we took a couple of entries earlier on in this week, short-term buying. So just stick with that, manage well. When I get 20, 30 points in front, I do like to get to break even. Bring the opportunity, get to break even, you become risk-free. It takes away any sort of emotional attachment, and perhaps you can allow the market just to run away. So bear that in mind. If it does take out daily high, I'd look to target the 200 moving average. But I think all of you now are going to have the ability of using multiple time frames to gauge the overall move, because these are real messy times, guys. These are real sticky charts. A lot of it's range-based. So end-of-day traders are kind of stuck with lack of opportunities at the minute. So start to look at your 4-hour, your 1-hour cycles, let price move, and then see where you can take advantage and where you can essentially adapt. Dollar CAD, again, another interesting one, guys. 39.20 lies as our support level. price is failing to break that. So it shows that we are seeing some sort of buying sentiment keeping price above and not allowing price to drop any lower. We're seeing lower highs form, as you can see, marked with our trend line. So for me, for safe buying, I'd like to be above, cycling above our counter trend line, above this 140 area. For shorts, I would like to see price cycling below 39.20. Personally, I think we'll start to range before perhaps a break lower. Initially, once we started to see this pattern form, I did highlight a potential head and shoulders, pretty similar to the pound dollar short chart. Then we identified double top. We did make money in here. I mean, there's over 200 points to make money from the bottom of the double top formation. Then coming to sort of a third bottom, we're now ranging. There's lack of buying in here. There's lack of selling in here. So we do need to see a clean break. Wouldn't be top of my list, but if you look yesterday, what a strong move we had from the Canadian dollar yesterday. 2050 cross, nice and early, giving us that early change of sentiment. Counter trend line broke and the 200 moving average broke. And I mean, look, from the 20 moving average, you had over 150 points in play. You had a technical entry off the smaller time frames to take that move lower down to 39.20 this morning, or early hours this morning. So yes, there are opportunities there, guys. If you look at a 15-minute chart yesterday, we did start to see these moves. Not as clean, not as precise pullbacks to the 20 moving average, but there was an idea to get in on this sentiment. So, I mean, the overall range of yesterday's bar was 200 points. So following on from that, let's see how well 39.20 can hold, because a 200-point drop in a day is quite significant. So if that does continue, then I would like to see a break of 39.20. Then, guys, let's target the 200 moving average. You've got another 300 points in play. Don't be greedy. Get managed when you're 30, 40 pips in front. But that is an opportunity if we see a break of this level. But as you can see, it is holding up pretty well. Dollar Swiss is stuck in a 200 pip range. It's flat, it's boring. We haven't got direction from the dollar. We haven't got direction from the Swiss franc. Until we see a breakout, just stay clear, guys. Initially, as you guys know, I did want to see a break above 98 to confirm buying. But that was in line with the dollar having its strongest month, which is usually May. And as I said, we're underperforming at the minute, so it's not clear. But we just have to adapt. When market's going sideways, stay away. There's better opportunities to cherry pick. Dollar yen, I do see this formation forming a very messy and not precise inverted head and shoulders. I'm not 100% sure because it really depends. I mean, over the last couple of weeks, we've seen a mix-up in terms of risk-on and risk-off sentiment. So the yen's been dragged lower, dragged higher, and it hasn't been clear in terms of what the performance or how we see price looking. We're not really seeing a build-up in many positions, but for me personally, guys, as you all know, I like it when the yen's showing clean strength, because we can adapt to cherry picking weak currencies, trading momentum on the smaller time frames, and filling our boots up essentially. What I'm seeing now isn't quite clear, but if we are looking to buy and we'll see the performance of the dollar, this may start to range if both currency pairs are strong or both currency pairs are weak. If price does break above 108, I would look to target 110, but again, not top of my list, guys. But let's just keep an eye on the weight and the performance of the dollar. There are a couple of other charts that I am looking at. If you do have any questions, get in contact with me personally. But I think you all need to have a strong understanding of what our major currency pairs are doing to then get an idea of the direction of the pound, direction of the euro. Don't go diving into your cross currencies before you have an understanding what your major pairs are doing. I do still see pound dollar short at the top of my list, but we do need to weigh up, is price going to stay below 22.45 and indicate smaller time frame opportunity shorts, or will we see a daily phase 2 in at 24, start to look for some bearish price action in and around this area, and then drop lower? That is my opportunity. Now, I just want to talk to you guys about oil as well, because I know some of you have been making a lot of money on oil recently buying. For me personally, it's quite a tricky one because I do see price lower. I know that the demand in China has increased, with pretty much China going back to usual. Obviously, here in the UK, we're still in lockdown and so on. But I do see price lower, and I think this is kind of being sentiment-driven higher currently at the minute. But $20 for me has always been prime support, prime target, same as $52 back at the start of the year and back end of last year. I do see a lower high formation pulling even a bit lower than this. Even could even come to $16, $20, $16. If we start to see bullish price action form around this, creating its higher low, that would then be my indication to get back in. First target would be previous high, and then again the 200 moving average, which will catch up by then. So just bear that in mind, guys. If you do have any questions, get in contact. We are here to help. I will start to keep on top of the analysis videos and post them more frequently. So guys, have a fantastic trading week. Make sure you're in all of our Telegram groups, and I hope to see you all soon.